Hi, I'm Toby Wells and I'm part of the accounts and tax team at Gerald Thomas, and these are my top tax tips for the month of August 2021. These tips are aimed to help a variety of people facing a variety of tax situations. Hopefully there are some snippets of information here that will be of help to you. Tip 1. Travel. If you're an employee and use your car for work's journeys, each tax year you can claim tax back of 45 pence per mile for the first 10,000 miles and 25 pence per mile for any additional mileage over the 10,000 mile mark. Unfortunately, under most circumstances, business mileage excludes home to office travel. An exception to this is for disabled employees who are given financial help by employers with home to work travel. If you receive mileage reimbursements below the respective 45 pence per mile and 25 pence per mile amounts, you can claim the tax relief on the excess not paid by your employer. Alternatively, if you are self-employed or a director of a limited company and use personal vehicles for business usage, you can claim mileage expenses which will have the same tax treatment as business expenses paid privately. I recommend that you keep and maintain a detailed record of business mileage, as HMRC can inquire into such expenses. Tip 2. Household bills. With the rise in people working from home as a result of COVID-19 and the expectation for this trend to continue for the foreseeable future, it's important to note that both businesses and self-employed individuals who perform work from home are able to claim a proportion of their household bills as tax-deductible expenses. Such expenses include light and heat, water, home insurance, council tax, and telephone and internet bills. HMRC permit two methods of calculating such expenses. Method 1, the proportionate method. This allocates the business's proportion of actual expenses incurred on a reasonable basis. Such methods include the amount of square footage the business uses as a proportion of the actual square footage of the house. A simple example being a house with 5 rooms of identical size, and one of these rooms is used exclusively for business. This will allow 20% of household bills as being deductible tax expenses of the business. Method number 2 is the simplified expense method. This is a set flat monthly rate based on hours worked at home. Expanding on the simplified method, the flat rates are as follow. If you work 25 to 50 business hours per month, the flat rate is £10. 51 to 100 business hours per month, the flat rate is £18. Over 100 hours per month, the flat rate is £26. The flat rate holds the advantage that it is easier to calculate than the proportionate method. For employees who have started working from home as a result of COVID-19, you can now claim £6 a week, and this claim can be backdated for up to 2 years. Crucially, there is no evidence of costs incurred required to complete such claims. As the backdate of the tax relief for 2 years allows basic tax rate payers at the 20% tax band to a rebate of up to £125. To check for eligibility, please go to the gov.uk website and search Working from Home Tax Relief. If eligible, you can simply apply through the government gateway. Tip 3. Trading allowance. With a reported 1 in 4 people now taking on a side hustle during the pandemic, the trading allowance is a key relief to be aware of. This allowance allows people to earn up to £1,000 each tax year from trading, such as selling goods on eBay without paying any taxes on the profit. This allowance can also be used if you earn more than £1,000 by allowing you to deduct the £1,000 as a tax-deductible expense rather than using the traditional deduction of actual expenses incurred. The trading allowance, therefore, is ideal to use when a business's expenses are lower than £1,000. Tip 4. Rental income reliefs. Similarly to the aforementioned trading allowance, the property allowance allows £1,000 worth of tax-free allowances to offset against property income. This is ideal for when property income is under £1,000. If this is the case, the income does not need to be reported to HMRC. Alternatively, the property allowance can also be used when property expenses are under £1,000. Notably, if you jointly own a property with others, you're each eligible for the £1,000 allowance on your share of the rental income. So for a husband and wife who jointly own property, they will receive the £1,000 allowance each. Another property-related scheme is the rent-a-room scheme. If you rent out furnished accommodation within your house, you can earn up to £7,500 each tax year without being taxed. This may be ideal for guest houses or B&Bs that have had reduced occupancy with the global pandemic. Tip 5. Charitable donations. In addition to the benefit that Gift Aid offers an extra 25 pence on every £1 donated to eligible charities and community amateur sports clubs, higher and additional rate taxpayers can benefit by increasing their taxable bands, ultimately resulting in a large amount of their income taxed at lower rates. For example, a gift of £10 per month with Gift Aid. Over the course of a year, a charity will receive a total of £150 as a result of the Gift Aid top-up from the original £120 donation. Taxpayers will benefit by increasing their taxable bands by the grossed-up donation. For example, additional rate payers taxed at 45% will receive a tax relief of £37.50 using the above example. Higher rate taxpayers taxed at 40% would receive a tax relief of £30. A key takeaway from this is it's important to keep a record of Gift Aid donations for your accountant, as your accountant cannot access this information from HMRC. And finally, my bonus tip for August. It's worthwhile engaging with proactive accountants who are aware and utilise such tax reliefs. On a related note, if you have any questions or inquiries, please contact us either by emailing inquiries@geraldthomas.co.uk or by phoning 01792 465 155. We will be more than pleased to assist.